Hello and welcome to this special edition of Indianomics. Stock markets have given a rousing reception to the government's plan to recapitalize banks with a whopping 2.11 lakh crore rupees. The finance minister has asserted that several lead indicators like IIP, core sector, exports are all already showing growth, and the capitalization of PSU banks comes just in time to accelerate the economic growth. Let's just hear what he has to say, and we will analyze whether growth is really round the corner.
I think the fundamentals are fairly strong. The inflation is broadly under control. We've maintained fiscal discipline so far. The current account deficit is under control. The exports are moving upwards. And if you see, post the first quarter, the early indications which have come out all seem to be pointing out in a slightly better direction than the first quarter itself. And that should be good news for the Indian economy.
So that's the question that we're asking in this show. Is growth round the corner? Will this capitalization really flare up growth? The other questions also that we will be asking our panel. Can so much capital fire up credit growth to a point where we may actually have to worry about inflation? Separately, are we spoiling the PSU banks? Are we giving them capital without fixing governance problems? To answer all these questions, I have with me a star panel, actually. Ashima Goel, member of the Prime Minister's Economic Advisory Council, but someone venerable here. Bimal Jalan, former Governor, Reserve Bank of India. Samiran Chakraborty, the Chief Economist at Citibank India. And in a bit, we'll also be joined by Dr. Rakesh Mohan, former Deputy Governor of the Reserve Bank of India. First up, let me get Dr. Jalan on the growth issue. Dr. Jalan, do you think, sir, that because of this capitalization, we are going to get a substantial jump in growth? Was PSU lack of capital the big roadblock, and with that removed, we're going to get good growth?
No, naturally, but the sentiment has become very positive, as you can see. Earlier, if you go back, say, 1 week ago, the sentiment was not this positive. I mean, there were two views. Whether it will work, it won't work, how are we going, whether it will be a cyclical move or a structural problem that we are seeing in our economy with the growth rate being low and inflation being low, despite the fact that we had high foreign exchange reserves and so on and so forth. And the corporate sector was waiting, the public sector had high losses, high NPAs and so on. So all this is a past now, so far as we are concerned. And so this is a very positive move, and recapitalization of this magnitude hasn't been done before. There was a recapitalization in 1990s, for example. But this is a very, very positive move in my view under the circumstances, because all our factors of production are positive. Inflation is low, foreign exchange reserves are high, our trade sentiment is very good, we can export, export demand is high. So everything, and technology, of course, we are among the best in the technological power that we have. So all the factors of production are very positive for us and today. And so the move that has been made in terms of recapitalization, it has a very positive impact on what you might say the prospects of the economy, to my mind.
Okay, that's good to hear from you, sir. You're a veteran of many cycles. But let me toss that to Ashima. Ashima, would you agree? I mean, if you looked at the disruption in the GST and some hangover of the demon problems as well, are we really in a position to take advantage of this surplus credit right away? Or do you think we will have to wait a couple of quarters?
No, I think we will have to wait. It is true that the sentiments are very positive, but market sentiments were always, the stock markets were always doing well. But we've had, private investment has been low, domestic demand has been low, credit growth has been low. And if you talk to bankers, then the constraint is not really the supply of funds. They are holding excess SLR just now. The constraint is really a lack of demand for funds. And you won't see that turning around that quickly. But that said, there are a number of factors that suggest that demand will also pick up. because consumption had received a temporary negative shock from demonetization and GST, which maybe is behind us now. And the world growth is looking up. That should be favorable for export growth. So, but I think we need, the government large planned investment will crowd in private investment, but that is going to take some time because that won't be immediate. I think one very positive feature is if this recap of banks is tied to giving more credit for smaller enterprises.
Oh.
Giving it faster and giving it in a risk-free evaluating the risks properly using data, because demonetization, etc., has made more data available. And that is where employment and therefore demand could rise.
Okay. Well, we lack a banker or an NBFC on the panel to be able to tell us whether Demon or even GST has given us enough data to run analytics. But Samiran, before we come to that part, is growth evident for you in the second and the third quarter itself, or third quarter for that matter, because now banks should be able to lend right away?
We have to be realistic on the timelines here. The government has said that by December they will come up with the exact guidelines on the recap bonds, and then probably in Q4 we are going to see a front-loaded large amount of recap. So, till that point of time, the economy should be going at a pace which we were anticipating before the plan. I don't see an acceleration in this quarter just because of the plan being announced. Having said that, I think the way I am looking at it is that is there a problem of demand for credit versus a problem of supply of credit? And we never knew the answer. Now we'll come to know the answer, because at least one part of the puzzle, which is the supply of credit, at least that part is going to be taken care of through this recapitalization plan. And since the private sector banks' credit growth was much higher than the public sector banks before this announcement, one can presume that there was some latent demand which these private sector banks were servicing. So now if the public sector banks, because of better capital, comes in there, then it could affect credit growth. The other part is that in which segment of the economy this credit growth is going to happen. Is it going to be more infra kind of credit growth, or is it going to be more retail SME kind of credit growth? Because that will have a differential impact on the supply side versus the demand side from a aggregate perspective. If it is increasing the capacity, then it should have better consequences. We will have to see where it goes.
Okay, actually, Ashima's point raises a worry in my mind. And the way in which the presentation was made by the Finance Ministry also gave me this worry. Do you think, Samiran, the government could say that we are giving you all this capital and we want you to concentrate on MSMEs or SMEs? If they did that, could this be counterproductive? I mean, more bad loans? Because I don't think the PSUs as yet have the data or the analytics capability.
Well, it's tough to say, given that we don't have any details on this program. In fact, we don't even have more basic details, like which is going to be the issuing agency. Is it going to be marketable versus non-marketable? What kind of SLR treatment, repo treatment of these bonds will happen? So there are lots of these questions in the market which are yet to be understood properly. So at this moment, it's tough to say whether this will be some kind of a tied scheme or not. But it's also true that MSMEs are a big driver of the economy, and if you look at the credit growth to this segment, that has been quite weak in the recent past.
Do PSUs have the wherewithal?
Idea to try to stem that.
No, but would PSUs have the wherewithal to sift and give credit to the right guy on the right parameters? I know some of the NBFCs have developed some bit of a database on it, but public sector banks for the last several years have become wholesale even in their liabilities, and they have to be weaned away from it. So do you think if they are directed, would that be a good idea?
So let's make it very clear that the recapitalization plan cannot address. Sorry.
Yeah. No. Go ahead. Go
Professor
ahead.
Goel, please go ahead.
No. Go ahead, Samiran. I'm coming to Ashima in a minute.
Yeah. So what I was saying was that we have to kind of keep in mind that recapitalization is not a solution to all the problems of public sector banks.
Okay.
It does not necessarily increase the efficiency of the public sector banks in any way. So, but at the same time, it's also true that if you take out the last few years, for a pretty long period, we were funding MSMEs through public sector banks only.
Okay.
So that model can come back into play if it is done properly.
Okay. Just your growth numbers, Samiran, before I go to Ashima. What are you expecting this year in terms of GVA?
So we were looking at around a 7% GVA number for the full year, which I know is a little bit on the higher side because we think that last year's Q3, Q4 numbers would probably be revised down, and that would give a nice base effect for this year's Q3, Q4 to be seen as much higher. Okay.
Ashima, I wanted to ask you another question. Actually, on this, if this recap were to come the way it is, 2.11 lakh crore, it is quite possible that at least 1 lakh crore is going to be growth capital. Now, in the hands of banks, it actually gets a multiple of 10. So, we are staring at a fairly sharp rise in credit if indeed it is put to use. I mean, are we doing too much too soon? Should the RBI have to keep a hawk eye on inflation next year?
No, well, I think that the government's push, for example, is on the supply side, infrastructure, etc. So, there are other reforms on agriculture which are keeping food prices, good monsoon, etc., moderate. The rise in prices has also been moderate, the procurement prices. So, as long as all these factors play out, I think we are seeing that prices have been low for a long time now. But somehow we don't want to believe this. So the RBI, for example, is convinced that it will rise. I'm not so clear that it will. I think many of our price indices have been revised downwards, for example. So there are a lot of things happening there we're not even measuring properly.
Okay.
So it should be kind of data driven. RBI's past few inflation forecasts have all been biased upwards. So I don't think we should be so quick to assume that inflation will rise, and we should wait to see if it does. And as long as food inflation is contained, I think we will be okay. And but one point I had about these public sector banks and this huge amount of credit which they can potentially lend, they have been really bitten by this last episode. Once bitten, twice shy. And they are just trying to clone private sector banks now. They are searching for retail lending. They don't want to lend to firms. But our problem is that credit to firms is absolutely, very low rates of growth. And you cannot grow without that. So, and at the same time, various reforms have been undertaken, improvements in governance, and I don't think anybody is going to tell them to lend without proper evaluation, assessment of risks, etc. So, and if they lend to the SMSEs in a big way, it will be very gradually. It will scale up. It won't be sudden.
All right.
And so there'll be time to build up the fintech.
Okay. Your growth number. I'll come to that issue in just a bit. But what's the GVA number you will work with?
I think 6.5, rising to 7 by the end of the year.
Okay.
But at present, it's not going to be that high. But, another positive factor I see is that a lot of, the RBI has been worried about transmission of interest rates. Now, they were not cutting loan rates because of the risk built in from NPAs.
Yes.
Already, there's been talk of reducing loan rates, which will be a positive for demand for credit.
Certainly, yeah. There would be greater competition now that the banks will be emboldened to lend, and that might push up growth. Well, we have to take a very quick break and come to the other part of the question, governance reforms in public sector banks. Has the money come too easily? That question after this break.